Morning everybody, Dwayne Showett here, DRFX Forex Swing Trading. I'm going to be taking a quick look at the Aussie US dollar pair today to identify if there's anything that jumps out at us in terms of an opportunity to trade this pair this week. So starting off on the daily chart as usual, taking a look at the overall picture, we actually see here that we are very close to this major outer uptrend line that had been formed since 2001. This is an opportunity that could present itself in terms of either breaking below this trend line to continue the existing downtrend that is now in place, or we could see a rally just above this area here or at the trend line, or even just below the trend line that takes us above these downtrend lines to continue the overall bullish direction of this Aussie pair. So let's take a look at the situation on the closer view of this pair to see what we have. Here we actually see that the pair broke out of this small consolidation setup below this larger range and this somewhat smaller range setup at the support area here. So this appeared to be a continuation of the movement, bearish in favor of US dollar towards this downtrend up this outer uptrend line. As tempting as this might be, trading towards this uptrend line could present some difficulties and could actually be risky. The reason being, generally when we're this close to a major trend line or a major resistance or support point, the market tends to slow down significantly. So what generally tends to happen is that during this slowdown, the market moves sideways and then reverses without even actually hitting that boundary, whether it's a trend line or a support or resistance area. This is a common practice or common dynamic of the market, and is one of the reasons why trading and entering this close to these boundaries can present that risk. Taking a look at an example of this situation on the US Canadian dollar last year, here we see that the market came very close to this inner uptrend line, this strong inner uptrend line at this area here. Zooming in, we can see that entering short at that area when we were that close to the trend line would also have been a very risky situation. Here we see that the market approached the uptrend line but then began to move sideways before reversing and continuing the main uptrend in favor of the US dollar. So this is one of the reasons why an entry was not advised when it appeared a couple of days ago. And taking a look at the situation now, we actually see that such a sideways movement has actually started to take place, where the market has become a little volatile and started to slow down. So what we could actually have here is the beginning of our setup that takes us above this inner downtrend line and then perhaps above the outer downtrend line to continue the overall bullish movement and uptrend in favor of the Aussie dollar. So this is one of the examples of where trading so this close to these boundaries is going to be risky, and it's always a better option to avoid trading altogether until we get a clear setup to either reverse or a signal below this trend line to continue bearish. So right here we could consider this a no-fly zone for the time being until we get a clear setup in either direction. So until then, take care.